LiteFinance, the world of financial freedom.
Hello guys, it's Monday 15th of April and it is time to start the market forecast for this week. As always, we will begin with the calendar and then continue with the fundamental analysis for Euro USD. Okay, so today we will get US retail sales. On Tuesday, Chinese GDP, UK's labor market data, Canadian CPI, and Fed Jerome Powell will have a discussion with his Canadian counterpart at the forum in Washington. So it might be good for us to listen to it in the background. On Wednesday, the UK and Eurozone will publish their final CPI inflation, and in the evening, Beige Book will be made public at this point as well. On Thursday, Eurogroup will hold its meeting and we will get the Philadelphia Fed Manufacturing Index. On Friday, UK's retail sales will be published and the PPI inflation from Germany. And that's about it in terms of calendar. Now let's continue with the analysis. So before the release of the US inflation report, the derivatives market assessed the chances of the start of monetary expansion in June as 50-50. After the release of important statistics, they fell to 18%. Derivatives do not have much faith in July, preferring September. The estimated scale of the Fed's monetary easing this year fell from 65 basis points to 45 basis points. For the ECB, the estimated scale of the rate cut is 80 basis points. The Euro USD is naturally falling. The European Central Bank signals that it is going to start monetary easing in June. This would be a compromise between hawks who recognize the slowdown in inflation and those who are surprised by the lack of resistance from opponents. However, by the summer, according to Bloomberg estimates, consumer prices in the euro area could fall to 1.8%. Economic growth remains weak, and ECB is going to find itself in an extremely difficult position. The regulator will be forced to cut rates either at each meeting or make a deeper cut of 50 basis points at one of the meetings. So, isn't it better to anticipate events and start monetary expansion in April? Thus, investors' attention has finally shifted from the start date to the speed of monetary easing. At the same time, the mirror opposite picture of 2015 to 2016 takes place now. 9 years ago, the Federal Reserve signaled that it was going to raise rates by repeatedly delayed its decision due to the weakness of the global economy. Ultimately, the federal funds rate increased only twice, in December 2015 and in December 2016. The US dollar finally grew on expectations of monetary restriction but then lost ground. Nowadays, the US economy is strong that the Fed has to shift the timing of rate cuts to a later period. The greenback is the strongest G10 currency, although the forecasts were gloomy at the beginning of the year. I believe the Euro USD will continue falling. Even if US inflation begins to accelerate in April, the Fed will need more data to adjust its monetary policy. So I recommend holding down to the shorts entered at the level of 108.45 and adding them up on corrections. And that will be all from my side for today. Thank you for watching and till next time.